Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BRIGHTSPRING Health Services INC quarterly report. BRIGHTSPRING Health Services offers a wide range of businesses and services, including pharmacy solutions plus infused, injectable, and oral medication services, provider services plus clinical home health care plus rehabilitation services, physical therapy, speech therapy, occupational therapy, applied behavioral analysis. The company also provides supportive care in home and community settings to various populations, including Medicare, Medicaid, and insured individuals. The skyrocketing stock price of BRIGHTSPRING Health Services, Inc., BRIGHTSPRING Health Services, Inc., BTSG, has experienced an astonishing surge in its stock price, with a remarkable increase of over 127% in the past year. Several key factors have contributed to this substantial growth. The company's inclusion in the S&P SmallCap 600 index has led to increased demand from index funds, boosting its stock price. Additionally, BRIGHTSPRING has delivered robust financial results, exceeding earnings and revenue estimates, which has fueled investor optimism for continued profitability. The company's strategic decision to announce a secondary stock offering alongside a share repurchase program has also been viewed positively by the market. Furthermore, positive analyst recommendations from reputable institutions such as Mizuho, Morgan Stanley, and UBS have reinforced investor confidence in BRIGHTSPRING's growth prospects. As the healthcare sector continues to perform strongly, BRIGHTSPRING's focus on home and community-based healthcare services positions it well for continued success. These factors collectively demonstrate why BRIGHTSPRING Health Services, Inc. has achieved a new 52-week high and experienced impressive growth in its stock price over the past year. The primary drivers of revenue growth for the company are multifaceted. A significant increase in demand for healthcare services has contributed to revenue growth, as well as expansion into new markets and strong performance from existing clients. The acquisition of Haven Hospice added $17.7 million in revenue during the 3 months ended September 30, 2025. Additionally, the Pharmacy Solutions segment saw a substantial revenue growth of 31% due to volume growth in prescriptions dispensed within infusion and specialty pharmacy. On the other hand, the primary drivers of revenue decline are primarily related to external factors: decrease in reimbursement rates from payers, increased competition in the market, changes in Medicare and Medicaid rates or methods governing payments, cost containment initiatives by third-party payers, and implementation of alternative payment models have all contributed to a decline in revenue. Net income and profit margins. A shift in fortune, the financial performance of a company, has undergone significant changes between Q3 2024 and Q3 2025. Notably, net income transitioned from a loss of $8,981 to a gain of $55,241, while YTD net income shifted from a loss of $35,925 to a gain of $111,793. This improvement in net income is attributed to revenue growth, which outpaced the increase in selling, general, and administrative expenses. However, profit margins have not kept pace with this growth. Gross profit margin decreased from 12.4% to 11.7%, while operating income margin increased from -1.1% to 2.6%. This mixed performance suggests that while revenue growth is driving net income improvements, it has yet to translate into sustained profitability. Adjusted EBITDA saw a significant increase of $43,296,000, 60.8%, for the 3 months ended September 30, 2025, further indicating the company's ability to generate cash from operations. Overall, these changes reflect a shift in the company's financial performance, with revenue growth and cost containment driving improvements in net income. The company's financial performance has shown significant improvement, as evidenced by its ability to generate positive operating cash flow in 2025. In contrast to the previous year, where it reported a deficit of $66,838, the company achieved an impressive surplus of $258,610 in 2025. This marked shift towards profitability is a testament to the company's financial health and stability. The company's debt level and interest expenses have undergone significant changes over the past period. Notably, while the current portion of long-term debt increased, the overall total debt has actually decreased from $2,610,583 to $517,204. This reduction in total debt is accompanied by a decrease in long-term debt, which fell from $2,561,858 to $2,465,334. In terms of interest expenses, there was a substantial decline, with net interest expense decreasing from $144,366 to $118,776 for the 9 months ended September 30, 2025. This represents an 18% decrease in interest expenses compared to the previous year. Pharmacy Solutions segment shines, while Provider Services lags behind. Our recent financial analysis reveals a mixed performance across different segments and regions. On the positive side, the Pharmacy Solutions segment stood out with an impressive revenue growth of 31%. This significant increase is a testament to the segment's strong market presence and effective strategies. In contrast, the Provider Services segment struggled, recording a lower revenue growth of 9.4%. This underperformance highlights areas that require improvement and attention from management. The disparity in performance between these two segments underscores the need for targeted interventions to boost lagging regions. Management is expressing cautious optimism about the company's outlook. Despite anticipating challenges in maintaining relationships with patient referral sources and potential market share limitations due to changes in Medicare and Medicaid rates or methods, they are focusing on a concentrated group of customers and patients. The divestiture of the community living business will lead to increased strategic focus, operational efficiencies, and greater clinical integration. The company aims to drive growth through its Pharmacy Solutions and Provider Services segments, with expected continued growth in patient census by 2% annually. They plan to increase share in specific patient populations and improve patient outcomes and satisfaction through integrated care services. Management is confident that their operating cash flows will be sufficient to meet cash requirements for the next 12 months and beyond. The company has made significant moves through acquisitions and divestitures. Notably, the acquisition of Haven Hospice is highlighted on page 45. On the other hand, the company has divested its community living business in 3 key transactions. Firstly, the community living business was reported as discontinued operations and held for sale, page 25. This move paved the way for further action. Secondly, the divestiture of the community living business resulted in modifications to certain equity awards, page 45. Lastly, the company successfully sold its community living business to National Mentor Holding, Inc., for $835 million, page 49. These transactions demonstrate the company's strategic efforts to optimize its portfolio and operations. The company's financial summary reveals that it has taken a conservative approach to shareholder returns by neither paying dividends nor buying back shares. This decision suggests a focus on retaining earnings and investing in the business for future growth, rather than distributing profits to shareholders immediately. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights concerns regarding inventory buildup or supply chain disruption. 2 key indicators point to potential issues. Significant volume of inventory purchased from WBA and Slash or its affiliates, page 46, and suppliers passing along rising costs in the form of higher prices, page 74. Furthermore, a decrease in inventory returns receivable suggests that inventory levels may be increasing, potentially leading to supply chain disruptions. That concludes the financial summary for BRIGHTSPRING Health Services INC. Feel free to comment below, and I will be happy to answer them when possible.